This is the TDB Unlimited quarterly business report for Q3 of 2025. You can tell by the title. This will kind of act as a double-edged sword, giving some insight to some of the younger entrepreneurs out there. Don't really know what's going on once you get into the space of like reporting your information and things like that. And then also for any potential future investors that really just want to know what's been going on with us. You know, outside of the just simply numbers perspective, getting it from the horse's mouth itself. So Q3 marked a pivotal quarter for TDB Unlimited with the launch of multiple revenue streams under the subsidiaries TDB Finance and TDB Unlimited, as well as Drip LaFuel. Despite modest beginnings in several initiatives, momentum has been building really well with audience growth, fund performance, new monetization channels. We've been positioning the company for really aggressive scaling in Q4 and beyond. So uh, we've done zero ad spend to this point. We've only spent money on equipment and cloud space to this point. We've done zero ad spend, and that's a little bit by design. I wanted to see how aggressive we could really be as this really small team, having gotten these tools together, and a lot of the time in this 2025 as a whole has been spent in building and launching these tools. So our sales to this point are only based on 2025. We weren't selling any type of products or anything like that before 2025. um, we were just kind of building up our brand name, building up our credibility within the space, so traders could actually trust us, trust our products, seeing me personally work within the space, work with traders, teach traders, guide traders, and do things like that. So um, year to date, we're at just over 8,800 in sales. I know a lot of people think that the trading gurus make all their money from sales, and I don't know about all the other ones out there, but we've only made $8,000 this year to date from core sales. It's only 199. Q3 contribution is 2,000, just over $2,000. So um, not not a crazy big influx just for Q3. And then our monthly audience has grown about 34% from about 1,500 last quarter to about just over 2,000 this quarter. Some new monetization channels. The Bird's Eye View tool finally got monetized. We went through a lot of back and forth with the ad providers and whatnot to get everything solidified so we could actually start earning from it. So we've gotten thousands of impressions since the launch in May of the tool, but we just got it monetized September 10th with the ads, and so we've made a couple of cents, maybe like 50 cents to this point. Not much, but we do plan for really aggressive growth for that with the ad spend. That's projected to be able to 10x really easily just with the exposure that it's able to get. When we launched it, it started getting crazy clicks just being what it was, just because it's a free tool for traders. It's a lot of traders are looking for direction, and it gives that, so it's able to fill a need pretty easily. So with the push that we plan on giving it, that growth should be able to get filled without too much friction in the market space. The trading bot service launched in Q3 as well. We have 7 current subscribers. The setup fee is 150. It paid $99 a month. MR on that is $495. AR, if sustained, currently at $5,900 roughly. Projections with the advertising in Q4, the subscriber base is expected to grow at least five to 10x, bringing in a projected AR of 30 to 60K by year's end. And these are all like a conservative to aggressive projections. So take the range for what that is. The bottom of it is on the lower of the ad spend. We do plan on sectioning about $20,000 for ad spend in Q4. So pretty aggressive. We're gonna be on all of our products. We have a clothing store that launched in quarter 2, but we didn't actually start putting out any type of really notifications of new clothing drops, things like that, until Q3. Um, we've made about $50 in sales for the clothing store to this point. Plan for a really aggressive push with that. We had audiobook. It's more streaming than sales, just because of the way that it's sold on Amazon. We've gotten a good bit of streams to amount to about $20 to this point. Not a crazy amount, but like I said, that's going to be tied with the aggressive push of this next ad spend, this next quarter with ad spend. Excuse me. So, and we also, we also plan on launching paperbacks with that, so that will kind of give a different angle of revenue for that. I know there's a lot of folks out there who would just rather read an actual book, especially the kind of book that it is. It's a entrepreneurial self-help book, so it's one of those that you kind of just want to have on your bookshelf, on your nightstand, just kind of sitting there. So we're gonna get those paperbacks out in Q4, and kind of open that pipeline up for more revenue. Our private fund is doing amazing. Quarterly return is at 11.55%. Year to date is 13.1%. Max that it's seen at this point, 16% in the quarter. Right now, there's some influx and drawing back, some things going on in the in the markets, but it's been going on very well, especially because that fund was not started initially until second quarter. So there's a whole quarter that's kind of missing of performance there, that would kind of have our returns year to date a little higher. Technically, our assets under influence is just over $50,000, just at 5139, if I'm not mistaken. And then our growth projections for quarter 4 are we can be modest about it, but with the amount of money that we're sectioning off to spend, it's going to be an aggressive push. So with our current audience at 2,000 people monthly, that's projected to grow to 5 to 7,000 with our ad spend push. The trading bot, current subscribers 5, that's projected to be at 25 to 50 by year's end. The clothing store, current revenue at $50, that's projected to be between $500 and $2,000 by year's end with this spend. Current income from the bird's eye tool, sorry, is just around 50 cents, from roughly 600 impressions. Like I said, we've already kind of gotten a little bit of a baseline with how many impressions we've gotten built up before having the ads on it. So we're projecting that to be just over $100 a month by Q4, and that's just sitting there completely passive. And we're going to be able to grow that exponentially as the rest of the company, the rest of the brand grows, from every single trader that we bring in. That's another person that's going to be using the bot every single day, or not using the bot, using the tool every single day, and able to add to that just by putting it in their toolbox, and benefiting from it in their own trading. And then our fund growth, we're targeting to stay within the same range we're in, 3 to 5% quarterly, which is better than most firms out there that's actually performing out there. Our AUI is projected to reach 60 to 70,000 with reinvestments and new inflows. So we should be bringing in a lot more subscribers with Harmony, meaning Harmony will be influencing more capital, more income on the market. It'll just eventually become a market maker in that way. That's the foresight for that. And then just to kind of close out a little bit, while Q3 performance represents the groundwork stage, Q4 is going to be the acceleration stage. So paid advertising, like I said, paperback launches, fund performance, marketing, will coverage, and all that's gonna drive a lot more attention towards the fund, which is only gonna drive profitability from all of our revenue streams even more. So, but there's a lot of risks and rewards when you're in the space of finance, and in initially starting a company like this, I knew that a lot of people would be a little like wary of getting involved with an alternative market. And alternative markets can be good or bad depending on the market conditions going on. So with trade policy and geopolitical shifts happening left and right, that impacts forex and global markets, all types of markets. But we're um, really heavily based in the forex market. So depending on how those policies work out over the next quarter, over the next year, that will definitely play into our flexibility within the space. A global shutdown or recession could reduce spending, investor appetite, and make growth harder for us specifically, because people are just doing less, spending less. We're in the business of money, so if money is moving less, then we will have a little bit of growth hindrance. But because of the fact that we're so diversified, having clothing and content, you know, kind of shades that risk. If money's not moving, people are still watching content, people are still buying clothes. It's just those are normal, perpetual markets that we're involved in to kind of soften the blow of any risks from the financial side of the company. So, higher interest rates could slightly dampen the market, but for the most part, if there's any policy, extra crazy policy changes, really poses the most threat to our business model. Them not letting traders, trade certain assets or certain times, or whatever new regulation they try to come up with. If that comes about, we'll just adapt and sidestep it. Competition in algo and AI trading is definitely heating up, meaning we'll need to stay innovative. And I plan to. I've updated Harmony quite a few times since it's been launched, and then uh, once some of the technology in the space, like Trade Locker, is able to be copied, like our current trade copier, where the subscribers get connected to, because the bot is trading a master account, and subscribers subscribe to the copy trader that's um, connected to that account. And right now, you can't connect a Trade Locker account in on that copy trader. So um, eventually, that's going to be opened up, and the tech is a little bit different from TradingView to Trade Locker, and there's slightly better trading that's able to be done because of that on Trade Locker. So the algo that we have, the version of Harmony that we have on Trade Locker, is better than it is right now on TradingView, where it's currently firing from. So once they do allow the copiers to use Trade Locker, and that's integrated, then I will be able to switch the master account to the Trade Locker version of Harmony, and do a lot even better for our subscribers. Right now, the promise is 5 to 10%, and granted, uh, I like to under promise and overperform. So that's the goal. The goal is to overperform and keep overperforming, and that be our edge in this space. The fact that we're just able to just keep breaking through barriers for our subscribers. Finally, Black Swan events, like sudden news shocks, or Trump say something extra crazy, those can distort signals and widen spreads. And our edge is in, you know, our risk management, you know, knowing when to sidestep that. Our algorithms know when to sidestep that. The bird's eye tool will give you a neutral reading when too much is going on. I'll tell my traders to hey, like, you might want to chill out. There's a lot going on. Um, you know, we put things out in our newsletters. Yeah, we love to protect capital. We love to grow capital. We love, you know, to make, you know, exponential gains and things like that. But at the end of the day, the one of our core values is protecting the capital. So, um, you know, when it comes to things like that, we know how to those black swan events. We know how to react to that. So we try to be as adaptive as possible. And Q4 is looking like it's gonna be a banger, and I can't wait to come back and do the Q4 report for y'all. All right, I love y'all. Make sure you're kind to somebody today. I'm gonna catch y'all on the next one.